Alright everyone, and today we are going to be talking about how anybody in America can be rich slowly. Everyone knows that everyone in today's world, especially younger people like myself, want to get rich quick. And the reality of getting rich quick is most of the time it's just not realistic. Unless you can start a drop shipping company in 10 days, fire it up, get it going, crazy successful options trader, you hit the lottery on Bitcoin, or you were just gifted with a lot of money from your rich parents. But anybody with dedication and knowledge can be rich slowly. Not even really that slow, but conservatively, you can be a millionaire in America, and I'm going to show you. So the first way to become a millionaire relatively easily in America is the Roth IRA. I'm sure many of you have heard of the Roth IRA. So we're going to keep this one short, but basically a Roth IRA is a tax-advantaged retirement account that allows you to contribute $6,000 yearly. And once you hit 55, you can add additional money. And as you see here, if you were to start at 23 years old, say fresh out of college, or if you're a laborer even younger, you would have $1.384 million by the time of retirement at 60 years old. And that's with an expected rate of 7%. You might get lucky. You could, if we have some bullish markets over the next 20, 30 years, you really realistically could hit 9, 8%. And I don't think you could get much less. I would say bottom on this is maybe 6, 5.5. But find yourself a good IRA. Companies such as Vanguard have a very nice one. But let's just play around with this. Let's say you didn't go to college, you have no debt-free. You were to start at 19. You would have $1.8 million. Let's just say you had some debt, had to take care of college payments. Didn't start till you were 28. You would still have $970,000, and this is all tax-free. I'm sure many of you know about the IRA. It's a cheat code. Everybody should start one as young as they possibly can. Let's get on to the next way to become a millionaire, and this is about a 10 to roughly 25, 30-year route if you want to become a millionaire this way, is investing into the S&P 500 or building a portfolio of dividend stocks. Now, the S&P 500 historically in the past 50 years has done 10%. A lot of this would vary on when you bought in. I mean, if you would have bought in at the tech bubble, as you see here, back in about 1999, well, you might not have seen as well of gains, but if you were smart, you would have doubled down, bought more to leverage down, get your average cost down, always buy the dip. And as you see here, it's just a clear run up from the 1990s all the way till present. This is a very safe investment. You're always going to be around that 10% or so. It's going to always average out to 10% in the long run. Don't panic I wouldn't panic if you bought in and like the virus hit. You can't even really see, but it dipped down pretty far, about 33%. You would have been smart to buy back in, make more money off of it, get your average cost per share down, get that easy money. After 15 years, if you were to invest in this, accounting with dividends that come from the SPY stock, you would be up roughly $500,000 up to $500,000 total. Now, this is not tax advantage. You would both have to pay long-term capital gains tax and short-term capital gains tax on this, but it is very, very for that $500,000, that'd be if you were to start with $100,000 and not contribute to it at all, just off the dividends and the average annual 10-year growth, $500,000. So you would have to pay Uncle Sam, but just by investing into the overall market, the DIA, Dow Industrial Average, and in the S&P 500 SPY ETF, which pays about a 2% dividend each year, get that compound interest, get that slow growth, and it really starts to take off after a couple years. So this is another way that you could easily become a millionaire if you are patient in the United States of America. Let's get to the next one. And the third way you could easily become a millionaire in America is by investing in ETFs or index funds. Another slow way to make money, but almost a guarantee. Unless the whole economic structure of America completely collapses and does not recover, index funds and ETFs will always be there. If you don't know what an ETF is, it's basically just accumulate a pile of stocks from a certain sector or just a balanced one. This one, QQQ, is a technology ETF, and its 10-year performance is almost 1,000%. As you can see, just great growth. Not that you should listen to analysts and stuff, but analysts have this as a 5-star buy, and it does pay a small dividend, so you will get that little bit of compound growth, my apologies. But other ones, other stocks, other index funds, you could buy index funds themselves from other companies like Vanguard, E-Trade, or you could buy individual stocks and shares like this. Index funds are a very, very safe way to get growth, and they often do outperform the market. So that is the